Happy Monday, everybody. We're coming to you with your weekly market update here from warm and sunny Cape Coral, Florida. Right now, we're at about 88 degrees. Today, we're going to get to a high of 90 and a low of 75. Wanted to start this video off with that. I know a lot of you guys aren't here just to see what the weather's like down here in beautiful Florida. So we're going to, this is pretty typical summer day, right around 90. You're going to get, some pretty decent heat right around 12 to 4, and then it should damper down after that. So we're going to be doing something a little bit different today. We're going to be doing a market update. So we're going to be going over different stats, mortgage rates, home sales stats, and then how this affects you as a buyer and how this affects you as a seller. And if you guys like this style of video, be sure to let me know so I can continue to make more like this. First thing we want to check out today, and sorry if I'm being a little quick with this. I just recorded it. This is my second time recording it. A little technical difficulties the first time, so apologies for that. So first thing I wanted to show you guys is going to be the mortgage rates. Today we are at a 7.04% national average in terms of a 30-year fixed. Basically every single type of mortgage is up. 15-year, 30 years, everything is going to be a little bit up this week from the last week. Let's zoom into this chart. So this is going to be essentially the last year of our 30-year mortgage rate. So as you can see this right here, we have seen a little spike. Again, 7.04% right here. We are still down from early April when we first got our big bond market spike, where we went up to 7.07%, and we're still down from the beginning of the year where rates were as high as 7.25% here in January. However, we've been in this range of around 7.3 all the way down to 6.15, between this last year. So we really got to kind of see which way it's going to break out, one way or the other. Either we're going to break out higher, see higher rates for longer, or hopefully what everyone's hoping for is we get those rate drops and we're going to see those rates come down below these low sixes. Obviously, these rates are going to affect both buyers and sellers. As a buyer, it's going to affect the cost for you to get your financing. So your monthly payment's going to be higher if you're paying more interest on your loan balance. And then that in turn affects the sellers. They either need to drop their pricing to make that payment comfortable again for the buyer, or they're going to limit their buyer pool to people who are only cash or people who can afford that payment on the house. And this too, I did want to mention to you guys that these mortgage rates are following this right here. So this is going to be the bond market. So this is the US 30-year note yield. So you can see how this tracks up very well with that chart that we had just last saw. So in October, we saw that very big increase. That was where I had shown you guys of that high rates at the beginning there. We had high rates in April all the way, we got some relief here in September, and then the bond market started rising at that point. In January, we peaked. We're technically, that's interesting. So this candle today had wicked up above this point from January. However, from November, we're still a little bit down. What we're watching is this range right here. We want to see if we're going to be at this higher end. If we break out, we're probably, again, going to see higher rates for longer. If we start going down, we're going to start seeing lower rates where hopefully we can get back into those low sixes, maybe even mid fives, low fives, depending upon how far the Fed cuts those rates. Back over to the computer screen. There we are. Okay. Next thing I want to check out with you guys, just some general analytics. Median sales price right now is right at about $364,000. This chart is going to show the whole. Let me make my guys smaller. This is going to be the last year, essentially median sales price here. So we've been hovering in this range, peaked at 415, lowest was 335. For the most part, we've been sitting right in this mid 300s range, 360 to 385. We've been kind of, in this little juncture. If we zoom out a little bit to each of these represents a month, you see we're still up from 2019, 2020. So the market's still healthy, but we are at kind of a little pullback period right there. So let's go back to our weekly chart and move along to our closed sales. So closed sales this week was 192. This, I feel like that's low, but what did I put over here? No, that's right. So last week we saw 206. This week we saw 192. As you can see from this last year, from May all the way till October, we were at a decline, recovered a little bit, had this little range, and then it broke out of this range, and we were starting to see 240 to 350 sales a week. We're slightly below that right now, so we'll see where this trend continues, if we're going to go back and start seeing these low sales numbers like we were in December, January, or if we're going to start seeing those rise. I do think that we're going to be seeing those rise based off of something that we're going to check out next. Next thing we're going to check out, percent of list price received. So this is going to be the percentage of the last listing price that the home ended up actually selling for. So if you were listed at $500,000 and someone offered you $50,000 off, that would be a 10% decrease. So you would have gotten 90% of your list price for the house. So as you can see right here, on average, people are getting about 95.7% of their last listing price for their house. So we've been really encouraging our sellers, make sure that you're priced right to begin with. People in this market are, really looking for deals. They're really trying to get things for as cheap as possible. So even if you think like, hey, I'm going to overprice the house a little bit, you're going to end up getting less if you want to end up selling it. So to just be in that range at the beginning is going to be recommended. You get more activity, more showings, and show you're more serious to those buyers. Another thing I want to check out is percent from original price received. So you'll notice this is way down as well, and this one is actually more concerning than the other one. So original list price received, we're seeing about 90% there, 89% to be exact. What that means is that original listing price, so the first price that someone listed their house for, they're only based off of these numbers receiving about 90% of what that number that they pick. So that could be due to a lot of things. It could be sellers trying to pricing from a year or two ago. It could be agents who don't, want to admit what the market's doing. It could just be, buyers don't want to pay full price in this market. It could be a lot of different factors, but the stats are showing us that we're seeing about an 89% sales price of original listing value. So if you listed your house for $600, you drop it to $675, then you drop it to $650, and then finally you get an offer for $640. That's where that $60,000 decrease, that's going to be where that 90% comes from. So that percent off a listing price is coming from that last number that it was listed at, and the percent off original price is going to be based off of where you originally listed the home at. So this is definitely, you can tell that a lot of these houses are having to be reduced in order to sell them. And even when people are putting in offers, they're putting in offers lower than the listing price. So what we found is it's better to be competitively priced in the market to begin with. That way your house is getting all the activity. Cash sales, this one's interesting as well. We have seen a little bit of a rise in cash sales. Our market does have a pretty big percentage of cash sales in general, just due to the fact that we're a pretty big retirement community. So a lot of people are coming from out of area, buying a house in cash, moving here, retiring. They don't want any mortgages or anything like that. However, we're usually around, as you can see for the past year, we've been around 30%-ish, even dropping all the way as low as 25%. When rates are a little bit lower, people are a little bit more inclined to want to go ahead and get a mortgage on a house as opposed to paying cash. So we saw those cash sales a little bit down there. However, we are seeing them on the rise now. Since February, we've been seeing about 40% of our homes selling cash. So that could be due to the rates. That could also be due to prices getting dropped lower. Things are making sense for investors who have cash. The cap rates are making more sense. The return percentage is making more sense. So they could be, deploying that cash rather than having it sitting off to the side. Days on market, this one is on the rise as well. So we're at 63 days on market currently on average, nearing the highs of this last year. Within the last year, median integer, the max it got was 65. So we're at 63 days on market. Different property types have different times to sell. An expensive golf access house is going to take longer than a cheap entry-level house. But this is just the market as a whole, what's kind of generally going on. So as you can see, time to sell for everybody has been on the rise. Back this time last year, we were at about 43 average days on market. It felt kind of slow then, and now we're at 63 days on market, and it's, obviously continued. List to close days, median living. Let's check this out as well. I'm just kind of curious, list to close days. So we've been kind of in this range, 100% or 100 average days from when you list to close. So that's probably putting you under contract around 70 or so days there. Let's also check out median new listings. So new listings are up or down to 401. So we've seen throughout the past year, saw a pretty decent new listings at around 400. Saw a decline, then we saw a rise all the way up in January to 678. So seems like a lot of people who were panicked to sell their properties for whatever reason got them on the market, and we're kind of seeing these level out a little bit. This one is actually very cool, and it's a good sign for buyers or for sellers, and buyers want to utilize this information as well. So for the past year, our pending sales numbers they started at around 277 weekly pending sales, and they dropped steadily declining over the last year till they bottomed out at 72 the week of October 12th. We saw a little bit of a rise and then a bottom out again in December for 94. However, after that point, we've seen a substantial increase since the beginning of the year, and we're actually up this week from last week with 5 extra pending sales. Hopefully, this trend will continue upward, and a lot of that inventory that's on the market will start to get taken off. This is something to pay attention to if you're a buyer as well. To maybe start looking to pivot into getting more active in the market, maybe look for that deal that makes sense for you. The more pending sales go up, the more competition there's going to be for you to buy that house, the less listings there's going to be available. So paying attention to that. As a seller, this is a good sign. Hopefully that means that there's more buyers entering the market, and since February there's the data has been showing that there has been, and as a buyer you want to start looking to go ahead and potentially get in the market. Active inventory is down as well, so this could be due to people just taking their properties off of the market. One thing we're going to see in a minute is listings that have either expired, been canceled, or withdrawn. We're seeing a lot of those as people and agents are stuck pricing from 1 to 2 years ago. So a lot of people are listing their house. Maybe it was worth $1 million in the peak, and now it's only worth $850. They say, hey, I'll sell it if I can get $1 million. Mr. Agent, let's go ahead and list it. But that's not what the market is telling us right now. So really, they're not a completely real seller. The people who really need to sell are priced within this market range to sell their property. But this active inventory could be going down. People could be potentially taking their properties off of the market, which don't really need to sell or have to sell. But also that pending sales stat that we had just checked out could be playing into this as well. So as a seller, again, good news, your competition is going down. So if just a month ago, you had 900 active listings that you had to compete against in Cape Coral, North Fort Myers, and Fort Myers, and now you only have 8,200 that you have to compete against. So not crazy, but it is about a 800 listing decrease. Hopefully we can start to get back into this range of last year, where we're starting to see a little bit more of a balanced market. So supply of inventory, this is going to be up. So we're going to have to start seeing some more buyers step into the market. Even though those active inventory and active listings are going down, the percentage of stuff that's closing has slightly dropped as well. So the pending sales are hopefully going to take this back into this nice range of supply, but just based off of the closed sales for the last week, it is a little bit up. But the pending sales, which are going to close in 30 or so days, are going to help this out as well. So absorption rate, this is going to be the chance that your property is going to sell based on the number of active listings. Right now we're at 2.3%, so basically 2.3% of the active listings are selling every single month. NAR is claiming that between 3.5% to 4.5% is a balanced market range. Unsold listings, this was the last thing I wanted to check out. So this is the withdrawn, canceled, or expired listings. We did see a pretty substantial increase at the beginning of May, and that's dropped off as well. So like I had mentioned, a lot of those sellers who were stuck in that old pricing potentially could have taken their houses off the market. Hey, we'll wait a year or two. We don't really need to sell. And hopefully that's leaving just the people who have to sell, relocating, need the money, whatever the case is, on the market. So as a buyer, those are the people that you're going to be able to get the best deal from. And as a seller, those are the people that you're going to want to price accordingly with. Not your neighbor that's like, hey, if someone comes and gives me $2 million for my $1 million house, I'll sell it. You want to be with the guy who's got the $1 million house and it's priced at $1 million. So that was the stats for this week. I hope you guys enjoyed this style of video. I'm going to try to do one once a week on Mondays, and then I'm also going to be bringing you guys a new segment here soon called Deal of the Week. We're just going to be going over a couple different properties, potentially a condo, potentially a multifamily, single family, maybe a nice luxury property, going over some numbers on them, and what I think would be a good buy, based off of what's active on the market. If you guys have any questions about any of these stats, how they, how any of this affects you, I would love to have a conversation. All of my information can be found in the description below. Should be a link to click to schedule a call with me, and then you can check out our website as well for buyer resources, seller resources, and to fill out a form to have me contact you there as well. So any questions, comments, concerns, feel free to reach out to me anytime. I'd love to have a conversation with what these stats mean for you, whether you're a buyer or a seller. Be sure to like this video, subscribe to the channel, and share this with anybody you know thinking about buying or selling here in the Southwest Florida market. Any neighbors, if you're a homeowner, share this with them, help them be informed on what the market's doing, and anybody that you know looking to move to the area, this will be a great resource for them to know what's going on. So thank you all for watching, and I will see you all next week. Again, be sure to like the video, subscribe to the channel, and share this video, and we'll see you all then. Thank you again.